Hey everyone, welcome back to CryptoCache. Thank you so much for joining me here. I hope you're having a great day. Taking a look here at SUI, see what's going on. Wow, congrats to our community members who got in at that, 86, 87 cent mark. That was definitely the area of which we were looking at getting into, so congrats on those. I never took my trade personally myself just because I wasn't available at the charts at that time, but hey man, to each their own. Congrats to those who were able to get in on that. So what we're going to do, we're going to update our fib levels here. We're going to look at our ascending trend here, which is quite perfect in a lot of ways. And obviously talk a little bit about the overall liquidation levels and kind of go from there. So if you are new to the channel, just want to say thanks so much for joining me here. Those who've been watching for a while, even more thank you for just consistently hitting the like button, commenting below, and just being an amazing part of my life. I thank you so much for that. It's really awesome. Speaking of amazing, let's quickly look here at some nice little profits here from the weekend. Took a nice little Aave short in 2 days, 28%, and a Bitcoin short, 30% in 3 days. So again, taking some profits to the downside. I'm getting the question a lot, hey, do we take any longs at this point? I would say SUI is probably the only coin you want to consider longing at this exact moment. Obviously that can all change though. So let's take a look and see if it's worth taking long at the top or effectively shorting the top, right? Again, this is a very tentative top. I'm simply just paraphrasing there. That's not the exact case, but it always feels like at the top when the price runs like it does, right? So when we look at this here, let's quickly understand, first of all, some late shorts here at about 113 to 115 range. Decent amount of liquidation there. If we do zoom out a little bit, we can kind of see there's what, 163, 130. So somewhere in the range of a quarter. Well, I guess that'd be, no, actually, sorry, zoom in 252, 200. So there's more like 400 million at liquidation at 120, 112 to 113. Okay. So again, that's just kind of something to note, but keep in mind there's a lot more liquidation levels down to between 70 and 80 cents. Obviously, that'd be an awesome thing to be able to get down to that level at this point. But once again, we probably don't want that because if the price continues to run, you're going to stay in profit, right? So what we want to look at really quick, let's quickly just double check the daily. See if there's any, actually let's go out as far as the weekly and kind of see if there's any significant candlestick closures. We can see 110 here is kind of a recent high for us. So we'll just go ahead and put that there. And then we can see another shelf as well, right here at about 137. Because I always get the question, hey, how much further is it going to go? When's it going to start to pull back if it does? And a lot of times previous candlestick closures, specifically larger candlestick closures, have a tendency of kind of giving us that tentative resistance because in this, what is it, 1, 2, 3, 4, 5 to 6 week period, a month and a half worth of trading, the price would not pass 110. So we can presume that will be a resistance for us here moving forward. Coincidentally, the price wicked up to that level and kind of rejected off. Okay, we can even see here, even upwards of about 115 is another little level there based on the daily. Okay, so what this does for us, this kind of provides us a resistance range so we can kind of pay attention to it, just so we can kind of see roughly, what that looks like later. So again, I like to draw those out, just kind of give us perspective. It's not a guarantee the price is going to turn around there, but if you look at this, look at the point of control here in the last X amount of days. 104 to 112, which is coincidentally exactly where the price action is right now, is that current point of control. That's where the most amount of volume is at this time. So again, volume speaks very loud. It's something you want to listen to, and obviously make sure you pay attention to. Again, for those who kind of just, they're fairly unilateral in their analysis, make sure you add volume to the equation. It helps a lot. I know there's some other analysis or other influencers, if you will, who use specific, one indicator and that's all they do. Just be very careful doing that. It's a very unilateral perception on the market and it's consistently changing. You're not going to catch those smaller movements, okay? Again, that's why we like to look at the macro stuff and also the smaller stuff. So you kind of combine it so you have a well-informed decision that you make if you're going to make one, right? So MACD is converging super strong. Stochastic RSI swinging up again for the second time. RSI at 70, that's generally a resistance level. And then of course we got the money flow index trailing behind with it. So these are all very, very favorable signs. And we pull up to simple moving averages, minus the 200-day SMA at 122. All the others are below the price action, giving us a solid amount of support in the 70 to 85 cent range. Coincidentally, we see a lot of support here in the 70 to 85 cent range, right? Because again, when you see liquidation, that doesn't imply it's support. It just implies that a lot of people feel comfortable taking a long position because you're on the right side of the tracks. That's exactly the way trading should be, right? We got to make sure we're always trading with the grain, not against it. I don't know if you've ever tried to swim upstream and a little, it's not as easy as it is to swim downstream, right? Why go against the grain when you don't have to? So at this point, the whole point of this is basically you're more likely to find success taking a long than a short. That's really just the easiest way to understand it. Now, it's not just that clear, it's not that cut and dry, but that's the general concept. However, at this point, we're coming up to a resistance range. We've already defined a larger, more macro resistances in addition to that 200-day SMA above the price action. Let's see what the 4-hour tells us. Well, we're above the 20-day SMA. That's the initial trend setter. Until we break below the 20-day SMA, there's no reason to short this coin. Same thing as well with the other SMAs. They're below the price action. We're right here at above 70. Anything above 70, folks, this is a situation where you want to continue holding your long position open. I know it seems crazy and weird, but in these kind of macro movements, you always want to leave your longs open when the price action is over that resistance. So 70 is like a line in the sand. If you get above 70 in the RSI, the price is more likely to run because it's just like, it's a super continuation scenario. So let's take a look here. Here's a good example. We take a look right here at August 8th at 5. We can see August 8th at 5 o'clock. This is when the RSI crossed over 70, okay? It never crossed down below 70 until this point right here, okay? And in which it established higher lows and continued higher. It was range bound here, we covered that, and that's why it broke out, right? However, all that being said, the whole point of this is to tell you that, when you break over 70, this is how much more price action you see. So a lot of folks they'll sell when they hit to 70. It's not really the best recommendation. It's best to wait until it comes back down to consider selling. Okay. Same thing is occurring right now. We just saw the price action pump right here, and now it's up here above 70. Till it comes back below 70, you don't want to consider selling. So I know it seems weird and kind of strange to wait for the price to pull back before you consider selling, but it may not pull back very far. It might continue to run. So you want to stay above it and essentially work with that. I talk about this a lot in my trading university. So just if you're not familiar already with that, make sure you check that out. For our community members in our community, I have a link here, really simple and easy under our members section for our university. All right, make sure you reference that and watch those videos if you haven't already. It's important to learn those things if you can. Paying attention to RSI is extremely important. So it's just a really basic, simple indicator that works very, very well. You don't need to overcomplicate your charts with too much. While I use maybe good 7 or 8 indicators at any given time, most of them are oscillators here, kind of letting us know the general consensus of what's going on. And then the SMAs are very primitive and basic. They've been around for a long time. So you really don't need to complicate your charts. All these trading strategies I have are derived from traditional markets, just to give you perspective. It all works kind of the same. Anyways, what I'm getting at here is that we're in a good position. No reason to consider selling your long just yet. You may want to consider selling if the price, or more so, the RSI on the 4-hour comes back down. That's what you want to wait for. So generally speaking, if I was in a long right now, I would essentially hold it open, consider monitoring it. Once the RSI crosses below 70, if that happens, that's when I'd consider selling. Okay, because that basically tells us we've lost momentum and that the shift in momentum is occurring. That's kind of what it's telling us. At this point here, the Ichimoku Cloud's giving us 3 out of 3 reasons to not short this coin. Again, every single time frame is screaming bullish convergence. Do not short this coin. I don't care if you have a monster short here to here, or even if it goes all the way down and you're like that one person online that showed how amazing you are because you caught you shorted the top. That shouldn't be the thing. All right, live, or trade for yourself. Don't trade to brag and show other people about it. Right. Now, I talk a lot about our success in our community because it's a collective environment. Right. It's important to be dynamic and to share that success, but it's also important not to be braggy and to take high risk trades and show the people that this is how trading should be. It isn't that way. Trading is more so a very it's an interesting thing, honestly. I guess I get frustrated sometimes, just being completely honest, when these moon boys show how amazing they are with their high risk trades, and the truth is they don't share how many times they get destroyed. So again, just some friendly advice. Be very careful. If you're curious about our trades, again, I post them on our Twitter, Telegram, and Discord. It's not perfect. We take plenty of stop losses, but the truth is the losses are a lot smaller than the gains, and it's important to make sure that you're not going too crazy. All of my trades are 5x leverage minus Bitcoin is only 10x. Okay. Long story short here, we're really good to go. There's nothing else you really need to note here, minus the fact that once the RSI maybe crosses back over on the 4-hour time frame, you may want to consider selling. Between now and then, there's no reason to consider shorting this coin. While it's pretty evident that we're coming up to a resistance level and a pullback would make sense, you're more likely to find success buying the next dip than you are to try to short into it. Okay, so again, maybe consider an investment at about 96 cents here, right? The reason why I say that is because we have this previous resistance range, and quite obviously that channel was broken. Okay, so again, when you get into this little type of horizontal channel, basically a rectangle pattern, the price breaks out, it's more likely to retest this most recent high before it legs up again. All right, so again, just some things to kind of be mindful of. I'll post our playout chart here on our Twitter, Telegram, and Discord so you can kind of see it. And I'll even include some Elliott Wave here as well. Fun fact for Elliott Wave, it's a very good, successful thing to utilize. But I would just be very careful only using that. I understand there's some influencers out there that's really all they do. And that's good. It's a good little macro perspective and such, but you can't base trading solely on Fibonacci retracement, even though it's a very effective way of trading. It should be added together with these other forms to make sure that you're more well-rounded. Okay, so just kind of throwing it out there. I hear a lot of folks in my community kind of praising that, and there's nothing wrong with that. It can be very beneficial, but it's also very flawed if all you do is that one thing. Okay, diversify. It goes for your portfolio too, folks. Don't just be a one-trick pony. All right, folks. Thanks again. I'm sorry I rambled again. Hope you have a good rest of your day. Appreciate your time. Look forward to seeing you in the next one. Have a good one. Take care.